Hello everyone. Since yesterday, you must have seen a lot of updates on your social media by real estate advisors and mortgage advisors stating that the Bank of Canada kept their interest rates at 2.25%. It's a good news. But maybe you guys only think that this news only affects for people who are in the market to shop for a new house or who are looking to get their mortgage renewed. But what if I tell you one thing, guys, that this affects each and every one of us as Canadians? Now, here is the thing. Since 2020, that $100 bill that you carried now only values $80. In the last 5 years, that $100 has lost 20% of its value to inflation. Inflation is that silent killer that has been creeping into our wealth from generations. Now, Bank of Canada has a very important role to play to keep that inflation low. Now, there is an important relationship that we need to understand between inflation and Bank of Canada's interest rates. They go hand in hand. The small tweak is that the Bank of Canada's interest rates are always slightly higher than the inflation. At times, when inflation goes up, Bank of Canada does not have any other antidote than, in order to bring this inflation down, they have to increase the interest rate back up. And this has happened many times in the history. One recent example was in 2023 when the Bank of Canada had to increase their interest rates to a very drastic number. Similarly, there was another example in 1980s when the Bank of Canada had to increase the interest rates to 20% in order to bring the inflation down. So guys, Bank of Canada is not your enemy. They don't want the Canadians to suffer more by increasing the borrowing rate, but they don't have any other option. Their major mandate is to keep if the inflation stays under 2%, Bank of Canada's interest rate would be at 2.25, 2.5%. But if the inflation creeps up, they are left with nothing else but to increase the interest rate. And right now as well, as we speak, there is a war between Iran and USA, which is affecting the oil prices. Because of the oil prices, all the transportation around us has gone up. The cost of transportation has gone up. And now the inflation is again creeping up. If the inflation stays high at 3% in the next month or so, Bank of Canada might have to take some drastic measures and increase the interest rates. So, bottom line is, Bank of Canada is here to help us to keep our wealth safe from inflation. So that's the role they play. And next time when you hear news about Bank of Canada's interest rates going up or down, they are for your safety and for your peace of mind. Take care, guys. All the best and be amazing.